Here live again from fabulous Las Vegas. Did this guy just crash the crypto markets? With my video on Tuesday, I gave you an urgent warning. There was so much data coming out. It was the CPI, the PPI, and Jerome Powell's statement on the economy, right? And what happened? Let's look at how did it actually turn out. The CPI, it was a surprise on the downside, right? CPI was flat in May. So same prices in May as they were in April. And compared to 1 year back, which is, almost history, right? It's still 3.3%. But we need to look at the month-over-month values now because we're trying to figure out where we're going, right? And if you look at this chart here, this is the solid blue line is all items. So that includes food and energy, right? Food and energy traditionally is super, super volatile. And it doesn't always point to persistent inflation. That's part of the market because food and energy goes up and down for other reasons, right? Like, is the harvest good and stuff like that, right? So we've seen, in 2022, we've seen a huge increase here in energy. That drove the solid blue line up, but it came down way faster. But what we see now here, after food and energy, all items with food and energy stayed a little bit flat here at around 3%, a little bit over 3%. What we see with this more important core CPI, right? That's less food and energy. It is really, really coming down here. So we're coming on track. And still, the Fed, oh, you see that here. Sorry, I didn't show you that. So here we are, the solid blue line, right? All items. And in 2022, it was all up here, but it came down. And here is the way more important, less food and energy, the core CPI. So we're at 3.4% here. So yeah, and it was flat, from in May compared to April, right? So we're really getting there. And think about what can this guy say, right? What can JPow say? He cannot say like, hey, everything's under control, because that would turn the market upside down, right? Everyone will think like, hey, goal achieved, and then boom, inflation would go up, right? So he has to be careful. He said, well, likely it's only going to be one rate cut this year, and previous communication was 3 rate cuts, right? So it's only going to be one according to latest communication from this guy here. And markets reacted yesterday, but only for a short time. Indexes went down, but came back after that, because after investors digested what's going on, they figured out like, well, this is probably going to be short-lived. They looked at these graphs that I just showed you here. And that's actually really, really encouraging. And it might be that one rate cut might probably be a little bit of a harder cut than everyone expects. And it might also be even more cuts than just one. And it might be a surprise then. And, we all know it's election year, and it's kind of, it's kind of likely. They plan that and then later say, oh, we thought it's only one cut, but here's the second, here's the third. And they might have to cut quite urgently because something might break. And, as I said in my last video, there are some guys that cannot hold on for much longer with these restrictive interest rates that we have right now. But let's also look at the PPI here, the PPI that came out just today. that also stayed flat. So the producer price index, a gauge of prices that producers get for their goods and services in the open market. And that is an early indicator of future consumer prices, right? Because what's being produced today is being sold to consumers tomorrow. It's as simple as that. So this looks a little bit more into the future, and they declined. Look at that. They declined 0.2% for the month against expectations for a 0.1% increase. Holy crap. That is another piece of good news today, maybe even better news than we had yesterday, right? And there's still the U.S. import-export pricing to come out tomorrow. Let's see how that might turn out. The Fed, yesterday, the Fed statements were a little bit like, we don't know, probably. There was some progress, but we're not confident enough to cut rates just yet, and maybe it might be just one cut this year, stuff like that. They'll have to say that, but, all the data now is pointing in the direction that we will be getting there, and we will be getting inflation back under control. So what did that mean for markets? Let's look at markets here. And we're Thursday now, June 13th, just after market close. So this is a live stream. It's 1:11 p.m. Pacific right now. So the market has closed 11 minutes ago. So the S&P 500 almost flat here, but futures are plus 1.37%. S&P 500 futures, NASDAQ futures up almost 2%. Then the Dow Jones is flat or slightly negative. But look at crypto here. BTC minus 2.41, ETH negative 2.27, Sol negative 4.71%. We're back to $147 here. GDO, a nice gauge of altcoins in the Solana sphere, also almost down 5%. And but the interesting thing is 10-year yields going down, right? Just 1.14 today, and they went down yesterday as well. And that means the MYI here, that's the municipal bonds here, tax-free bonds that I'm holding here. They went up 0.63%. I look at Tesla up another 3% today. That's also because of news in Tesla that Elon got his pay package approved or reapproved. It went up like 5% yesterday, another 3% today. NVIDIA is now at $130 almost, which is $1,300 pre-split. So that's a lot. But crypto has been suffering. So what happened? Did this guy kill crypto? I don't think so. I just think there was a lot of news items yesterday and today, very positive news on the inflation and on the interest rate side, right? So much of the fear that, rates might be higher for longer, the fear has been taken out a little bit. Jerome didn't put it really bluntly, but with all the data that we have, much of the fear is gone, and that lifted tech stocks, right? Tech stocks are the one that have been beaten the most. They are still, relatively subdued compared to where they were pre-pandemic or, post-pandemic and stuff like that. So most investors went into tech stocks that have most of their expected profits in the far future. So there's going to be a few years out. So interest rates, when you discount it to a present value, you have many years to discount the interest rate back to come to the present value and the present valuation. So that's why these tech stocks usually are way more sensitive to interest rates than other stocks that are like value stocks that are in a mature market, right? So these growth stocks, there was a big run into growth stocks, as I've shown you, and this came at the expense of crypto in this case, because everyone was now, oh, what should I do? Get into these tech stocks. And who was in crypto already was in crypto. But I think let's give it a few days. There will be a lot of other investors and traders that will think like, well, crypto actually is also going to benefit from lower interest rates in the future. Usually they front run all these things, which we've seen, right? If we look back the past 12 months, crypto has been front running tech stocks a lot here, right? And now tech stocks are catching up a little bit, but I don't think this will be at the expense of crypto in the long run. I'm still bullish, and of course, no financial advice here, but I'm still bullish for the rest of the year on crypto prices in general, on altcoins in specific, and yeah, so that's how it turned out. So let's keep an eye on import-export prices tomorrow. And for today, thanks so much for